Good morning, everybody. Hey, welcome to this, what is it, the 5th of February? Glad you're with us today. And we'll talk about what's happening in the marketplace when Dave joins us here in just a few seconds.
Yeah, they forgot the lyrics at the end of the song each time, don't they? That's Earth, Wind, and Fire at 105.7 Light FM. Good morning. A little drizzle out there. It's 57 degrees now, and oh, it's time, yeah. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. And 8:41, it's time to double check in and see what's going on Wall Street this morning. It's been a confusing week, and well, it seems like they might have the government back up in gear because we were surprised by a report that we didn't expect to come out on time this morning. On the phone, Philip Statler from Statler Financial Services in downtown Sebring. Philip, good morning. It's good to hear you today.
Hey, good morning. Good to be here. Trying to stay a little dry this morning, but appreciating the rain for sure. My yard definitely needs it.
Oh, absolutely. I was telling you before we went on the air during the freezes, I figured why take a chance on a freeze? So I just turned off my irrigation system. With a little bit of luck, by tomorrow morning, I'll be able to turn it back on again and at least get my once-a-week wet down now on my yard. Other than that, it was kind of rain falling on the early press releases that we got because we don't have any great news there. But yesterday, we actually ended up looking like we stabilized a little bit on that software sellout. The Dow ended up eking out a 0.5% gain. Standard & Poor's, though, down by 0.5%, and NASDAQ continued falling yesterday. We're down 1.5% on NASDAQ, and I'm reading tip sheet articles saying the AI sell-off isn't done yet. Finally, they're getting tired of companies spending like drunken sailors on artificial intelligence, right?
Definitely seems to be a case here. I mean, the Russell 2000 down another 9/10. However, let's point out the Dow Jones Industrial 30 has hit a 3-week high yesterday. So that was kind of good news for that index anyway.
Yeah, well, it needs to be brought up that while we're talking about a sell-off, all four of the major indexes, are within inches of, record highs. So it's not like when we have a couple of percentage point sell-offs like we're going into the dumper by any measure, but still, the lack of ease from the big investors, every time a new company comes out and says we're shooting a wad on artificial intelligence, investors are running for the exits like they're going out of style. And when we get to the headline report for the day, it looks like that trend is continuing. I mean, we're just scared of companies spending money in a hinky economy, aren't we?
Yeah, we are. It definitely seems to be an indication of downward pressure when you say you're going to be spending more money next year.
Absolutely. Data dump out this morning to start our morning out. Something came from across the pond. The European Central Bank decided to hold their rates steady again, basically the same strategy as our Federal Reserve, except they'd already gone down quite a bit in rates before they started holding steady. They put out the Challenger layoff projection report this morning. I didn't have an absolute number, but the headline on my tip sheet said that the number of layoffs projected in the country is at a multi-year high right now, which sounds like it kind of is confirmed by the first-time unemployment claims, doesn't it?
It does, Dave, because those numbers came in, I don't want to say significant, but it is kind of significantly higher than last month. Came in at 231,000 initial job claims this week, compared to last week, 209. The expectation was a little bit of an increase of 212, but it was significantly more than that, at that 231,000. So definitely seems to be the case that we are seeing more and more layoffs, and that seems to be a headline we're seeing as well. Kind of here and there, hit and miss, but we are seeing headlines where companies are laying off folks.
And I'm still having trouble reconciling the numbers down the line because the headlines, like you say, we're hearing record high layoff plans from the Challenger report. It seems every day there's a new headline about how one of the major companies is laying off thousands of workers. And the first time unemployment claims tracker, at the very least, is still, I won't say 231,000 people looking for work is a good thing, but it's roughly in the range that the normal sifting and winnowing in a 4.5% unemployment rate economy looks at. There's a certain amount of sifting and winnowing that happens every time. Yeah, it's up from last week, but it's not up to what you'd call major concerning high numbers of unemployment claims.
No, it's not. Let's remember, Dave, that when these companies announce layoffs, it doesn't mean it's happening like boom right now. It means that they're laying off people over a period of time. And so I think that's why this number doesn't, hyper vault up when we hear this news of layoffs, because, hey, it may be, depending upon the state they're in, the rules they have to follow, it could be 3 to 6 months before those people actually all get laid off.
Absolutely. But at the same time, we've been hearing these layoff announcements now, well, for the better part of a year, and it just hasn't been overall reflected in the uptick on unemployment claims that we see on a week-by-week basis. And okay, we're at 4.5% unemployment. That's a little higher than we want it to be by any measure. But at the same time, I guess instead of saying we're booming, I'd say we're okay in terms of the overall macro measures on the economy. So, the news reports and the numbers just kind of aren't reconciling in my brain of an economy that's just absolutely in the tank. Know what I mean?
Oh, definitely not. Definitely not. I mean, I don't think by any means is our economy in the tank. But it is definitely, there's pressure on our current economy. I mean, I'm looking at interest rates, and interest rates are ticking really back up. I mean, I track the 30-year more than I do the 10-year, because 30 years mortgage based, what mortgages are really based on. So, I mean, we're getting back up close to that 5% range at 4.91 percent. We stayed around that 4.75, 4.8 for quite a while. And so now we're seeing some movement up in that area.
Not good for mortgages or for home construction and all the allied fields that affects as well. Oh, back to macro. The good news with the government getting back to work, we will get a January jobs report. We're just not going to get it tomorrow. They've now scheduled the big jobs report we were supposed to get with the monthly unemployment rate figure for Wednesday morning. They took 2 days off, and it takes them 4 days to get the report out.
It's the government.
Civil service is a wonderful thing, isn't it?
It is. It is. So, hey, but at least we'll get the number. We'll get the number.
We'll take it, and it's instead of being 2 months behind, it's only 4 days behind. So I guess we'll take it. It is earnings season. Before we get to that, though, I've got to make mention, because I've got so many friends that talk about Bitcoin being such a money machine. I'm trying to figure out who floated the idea, but Treasury Secretary Bissett yesterday basically said, hell no, we're not going to bail out crypto, which kind of makes me wonder who floated the idea to begin with. But the response from the crypto community was to trade down Bitcoin. It's now down, and let's see, on my morning quote here, I'm looking at 69,340. That's like a 45% drop from where it peaked at 120 something a few months ago.
Yeah, it is. And I will, I've had a couple of discussions with clients there. And, the indication is that for the way people are really trading crypto now seems to be more of a tactical strategy. In other words, they're looking at the charts, right? They're more chart people are looking at, okay, where's the floor? And I think that floor, if memory serves me right, is somewhere around 65 to 64,000. So it'll be interesting to see when we kind of get to that floor. Remember, the last time we hit that floor is when it boom backed up to like 110. So the question is, at what point do the chart guys determine, okay, it's time to start buying this baby back up? Because that's what I think people are really relying on now, because let's face it, there's no fundamentals, right? It's not a company that has fundamentals. I think people are just tracking it based on charts right now.
And I really haven't gotten familiar enough with crypto to really read any of the Chart Geek articles about it. But, I just look at it from a layperson standpoint, and I see, up close to 120 at its peak. Now it's down to 69. Boy, I sure am glad I wasn't one of the people that bought it at 110.
Exactly. Yeah, you are. But you'd
It just
still be
proves that.
excited if you paid 1,000 for it, right?
Well, that's true. If I was one of those people that bought a pizza with a Bitcoin 10, 15 years ago and say, hey, wow, this is good stuff. Yesterday, we were talking about Alphabet reporting at right after the close yesterday, and I was kind of ruminating about the question. I mean, the software companies are selling off, and the hardware companies are, in general, holding their own in the high-tech world, and I was kind of curious what the investment community was going to respond to Alphabet and Google as being. It sounds to me like we think it was software, don't we?
Well, I think so. So I'm looking at the earnings report that I'm looking at Google or Alphabet. They beat on earnings by almost 20 cents a share. Revenue was, man, almost 2 billion more than expected. So I mean nothing. I mean they had a great quarter, right? And so and even you start looking at Google Cloud, this versus what was expected. YouTube advertising versus what was expected was down just a little bit. Traffic was up a little bit. So, I mean, I'm looking at the numbers. They're not bad, Dave. Here's
Yeah, I
where
mean,
the
top line,
here.
it looked like a dang good report, and then I wondered why in the heck they fell like a rock.
So it's called CapEx spending,
Yep.
right? So they are going to more than nearly almost double their CapEx spending from 25 to 26. And so that means they're going to take that profit they made and they're going to reinvest it back into the company for CapEx spending. And that means there's less money for dividends, there's less money for other things. And so I think that's really that could also then affect their earnings as well in 2026.
And number one, the fact that they're blowing it on artificial intelligence, which is definitely not something the market likes these days. I've sat in on enough conference calls in publicly traded companies. As soon as the CEO mentions capital expenditures, the analysts invariably start quizzing him or her down to death because, by and large, investment analysts don't like high capex expenditures, no matter what it's in.
Well, that's right. I mean, I'm looking at their revenue number. Their gross revenue was 18% year over year. Their net income was up almost 30% year over year. So, Alphabet did a good job.
Yeah, I was just saying the fundamentals looked absolutely great. Any other company news you got this morning?
Well, let me just say they're down almost 4.5%. So I forgot to mention what the effects had on their stock, right? So
Which actually is good because they were down 7 right after the report, so they're recovering a little bit.
yeah. So the other thing we got several coming out today, and we got several that are tanking this morning. Qualcomm, the chip maker, you know, they've kind of got hit by some global memory shortage, kind of hurt its forecast. They 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 adjusted their earnings per share, and so they're down better than what it was, but still getting clobbered 9.6%. 9.6% right now.
Well, I
Yeah, if
was
we flip,
wondering who was going to get bit by the memory chip crisis because I know it's a real problem right now.
yeah, and then you got Estee Lauder. I guess they women have stopped buying as much cosmetics. They they came in and kind of busted up their earnings expectation. I mean, they beat for this last quarter, but everybody's looking at what are you going to do for me this quarter, and the expectation is that they're not going to do as well. They're down 10.25% this morning.
Ooh,
Yeah,
you're just full of merry sunshine this morning, aren't you?
it is. But we can go from Estee Lauder to Elf Beauty
Oh,
Supply, and Elf kind of flipped the coin on them. They raised their full year guidance. They surpassed their earnings substantially. They came in at like $1.24 a share versus 72 cents expected. That's a huge difference. And so they're trading up today about 4.33%.
all right. You got one more?
I do. Let's talk about Tapestry, which is the parent company of Coach.
Mm-hmm.
They had better than expected results for their second quarter. both on earnings and on revenue. So that has them trading up a little over 6.5% this morning.
All righty. Resetting the table this morning, it was an okay day on the blue chips and not real good on growth stocks yesterday. 45 minutes before we open this morning, what are we looking at?
Well, it's a lot of red today, Dave. A lot of red. The Dow down 0.4%, S&P 500 down 0.6, and the Nasdaq 100 down 0.8%. Russell 2000 don't want to get left out either. They're down about 55 100. So everybody's red there. On the other side, red too. Silver getting clobbered this morning. It's just been volatile the last week and a half. Down 10.2% this morning, back down well below 80 to $75.89 an ounce. Gold down 1.8%, and crude oil down 2.5%. But Dave, it's a little bit more than where it was yesterday at $63.54 a barrel.
Now I'm starting to look at just don't go over 64. I mean, my defense line keeps moving up, and I don't like that. Overseas markets, the Asian Rim, generally not a happy place to be. The two mainland Chinese markets were both off by about 1% on average across the day, and the rest of the indexes followed course. Europe, ditto, not massively off, but still off. The average European index halfway through their trading day, down by a little over 0.5%. It's just kind of gloomy all over the world this morning on the major indexes. Getting my retirement plans together in the face of a real volatile market takes an expert pair of eyes. How do I get your help to make sure I can still retire, sir?
Then give us a call at 863-382-0037 to schedule a 30-minute phone call where we'll look to see where they are and make sure they're on the track for the retirement they always dreamed of. They can also go to our website at statlerfinancial.com, and they can click there to actually schedule their appointment as well. And then this weekend, join us for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back here again tomorrow morning about the same time. Be well, and I'll see you then, all right?
All right, man. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Philip Statler.
Hey, guys. Thanks for joining us today. Hope you have a great rest of your day. Join us again tomorrow. Until then, have a great one. Bye now.